Hello there, my friends, and welcome to the Saturday episode of Stand Up with Pete Dominick. I'm doing a Saturday episode most weeks for over a month now. Unfortunately, I couldn't get Christian Finnegan and Ophira Eisenberg to join me, but fortunately, I got one of our favorites, Barry Ritholtz. Everybody loves Ritholtz, even if you don't love finance and economics and banking and all of it, and even if you don't like them, then you still often like Ritholtz's analysis of it all. Somebody recently emailed me and said, I don't know, he rubs me the wrong way. He sounds a little bit arrogant. Yeah, for sure. That's what we love about him, and I call that out whenever possible. At one point, he says he's been eating really well, traveling through Europe, and I just laugh. That's part of the deal that you get when we're talking to Barry, but we love him. He's a honest, transparent, forthright, and I think righteous, and mostly same sense of morality as me. I love Ritholtz. He's become a good friend of mine over the years. He's on Twitter at Ritholtz. You should read his blog, The Big Picture. It's one of the most famous blogs in all of finance. And he always is able to distill all of the issues that I want to talk about in a way that I can understand them and in a way that's usually pretty fun. Okay, so we talked about interest rates, inflation, a little bit of politics, some new banking regulations that might be working, and so much more as always. Listen to his podcast, Masters in Business, read the blog, get his book, Bailout Nation, which is still so relevant. And of course, I can't do a Saturday, much less a Monday through Friday show without your support. So sign up now at patreon.com/Pete Dominick. Let's do it right now with Ritholtz. And there he is. Hi.
Howdy. How you doing, Pete?
I'm doing good. I'm very happy that you were available to talk to me, and I have several things I want to talk with you about. What do you want to talk about?
We can talk about interest rates and the Federal Reserve, inflation.
Yeah, that was one of my
things. We can talk about what people are calling profits inflation or greedflation. I think we touched on it last month. Really, we can talk about, God, I spent some time on vacation amongst the moneyed set in Europe, and it was, you think there's wealth inequality in the United States, and then you go about a half hour north of Geneva, and holy fuck, that is some old Nazi money up there. It's amazing.
Is that right?
Well, I mean, to be fair, the Swiss have been in the banking industry for centuries, so not all of it is Nazi money. Some of it's blood money, and other is terrorist money. Swiss banking secrecy laws meant that you don't know whose money you're taking. It could be, Holocaust victims' money that the Nazis grabbed. It could be, I think part of the recent changes in international banking laws have been, hey, we don't really care how many centuries you guys have had secret laws. You're laundering money for some of the worst people in the world, and we're just not going to put up with it anymore. The U.S. in particular, especially after that whole Credit Suisse, here's how to hide money from Uncle Sam nonsense, they got outed. One of their employees, to save his own ass, testified, and it really punctured a lot of the Swiss banking secrecy laws. They're like, oh no, we're secret. We can't reveal who our things are. Fine, we're going to just bang you out of the SWIFT system. You won't be able to interact with U.S. banks anymore, motherfuckers. Now tell us about your vaunted Swiss bankruptcy, Swiss banking laws, secret banking laws.
Wow, a lot of bad headlines for Credit Suisse. Bank found guilty over money laundering.
Money laundering, all sorts of scam.
Found guilty
ways to hide taxes.
Cocaine cash laundering case.
To be fair, when someone shows up at a branch with a suitcase full of 10 kilos of cocaine, the exchange rate is ambiguous, so it's hard to guess.
What was there some kind of international financial regulatory new system created as to prevent banks from becoming?
I think a lot of the loopholes were closed, and a lot of the room that the Swiss had to maneuver around international banking laws got closed. And by the way, Putin did everybody a favor by accident, because when we slammed the door on Russia's connection with the rest of the Western banking world, we discovered a lot of stuff was being laundered through. It wasn't just Credit Suisse, but Deutsche Bank was another one. It really led to a series of dominoes that revealed just how corrupt so much of the international banking world has been.
Do you know who Credit Suisse's largest shareholder is?
Today, now that they're part of UBS, or how far back are you looking?
No, this is back from Axios in March, shortly after the scandal broke. But their largest shareholder then was the Saudi National Bank.
Gee, what a surprise. Well, sometimes when you can't swap cocaine for cash, you just need a good bone saw, and you could go right into it.
You're not a big...
By the way, is there another group of people who have surreptitiously become bigger international assholes than the Saudi royal family? I mean, these folks really have zero
the Russian oligarchs, I suppose, are up there.
Yeah, but that was so well known for so long.
Right, fair enough.
But by the way, a lot of people called out London and the UK for, being Moscow on the Thames, and the oligarchs just bought their way into London society, and that has very much been reversed following the disastrous invasion of Ukraine by Putin. Even if he manages to win the war and capture Ukraine, he's done so. And I can't tell you with any degree of confidence that will or won't happen, but he's done so much damage to the Russian economy that the ramifications are going to last for decades.
What do you think of the PGA Saudi Golf League merger?
It's kind of creepy. It's suddenly the PGA, the U.S. PGA, is owned by the Saudis. Here's the one saving grace about this whole thing. For the past 10, 20 years, golf as a sport has been in decline. Young people aren't playing it. It has always been an elite sport. And then Tiger Woods and Phil Mickelson and a handful of other people kind of opened it up to the masses. And people have, if you look at the numbers, people have been leaving it in droves. It's too expensive to own and manage a golf course. A lot of them don't do especially well. Some do, some don't. The land is more valuable for housing than it is for chasing a little white ball around. And, I'm never developed a taste for it because, maybe that's my attention span. I don't have 4 hours to walk around a golf course. If I'm going to spend 4 hours doing something, it's going to be a lot more interesting than that. But that's just my taste. I know people who love it. I just never developed the flavor for it.
Yeah, well, there you go. All good points about
so
the sport.
They're buying into a sport that a number of big brands like Nike have more or less abandoned golf because there's no volume in it.
I had no idea.
Hold on. Let's take a look at it.
Why there was any interest to begin with, but hey.
Well, any sport is going to find its own. Nike's failed history in golf clubs. It's a whole run of stuff, and there's just not enough business there for them. Look, I started playing tennis about 10 years ago. I don't really get pickleball. Like, wait, tennis with even less running? I mean, come on. The whole point
that's
of this
really
is
fascinating.
Break up a sweat, but people love it. I know people who love pickleball.
I read about there's so many more injuries as a result of this spike in this new sport. You got so many people playing. Right. But I think it's less a result of the movement of pickleball and more the result of it's generally speaking people who are not in great shape starting to play something, move around, and also getting a little older. It's more likely they're old people who are out of shape probably break easier. No offense. I mean, but I'm just looking at the statistic.
Old or out of shape. You bald son of a bitch. Look how gray you are. You have the nerve to call me old and out of shape.
I may be in the best shape my last 20 years.
I'm fond of saying I'm in shape. Round is a shape.
Oh, I'm pounding it. I'm loving it. I'm making a huge priority as part of my day. Like I'm training for like a half marathon, even though I'm not.
No kidding.
Yeah, I'm really.
Wow, good for you, man.
I'm eating very, very well, and that's.
Oh, me too. We've been eating well all across Europe. It was.
Well, good for you. You're, if you have access to. Let's get into the announcement yesterday at the Federal Reserve, the market reaction to it today. Thoughts?
Yeah, kind of fun. I mean, so my dad always used to beat me over the head with this Ralph Waldo Emerson quote, which is, I can't hear what you're saying because what you're doing is speaking so loudly. That's what my father used to say. Like, what? What's not? I can't hear what you're saying. Your actions speak so much louder than your words. And so the Fed yesterday came out and they said, we're going to do 2 more cuts and our job isn't done and blah, blah, blah. But they didn't raise yesterday. And the immediate reaction was a sell-off in the market on Wednesday, June 14th. And then the market recovered almost all the losses. And then today we're up 1 or 2%, over 1% across the board, 1.25%, let's call it. And it's basically the market saying, we hear what you're saying, but more importantly, we're watching what you're doing. And it doesn't make sense that you're going to you're going to stop and you're data dependent and you're waiting for more information. And then you're going to start again. What happened to the long and variable lag of monetary policy? You started raising rates in March 2022, which means that, the past 6 months of rates hasn't really affected the economy yet. Takes a while to work its way through the system. At least that's what the traditional argument has been. And so, if the economy is pretty good, it's not great, but it's pretty good. It's better than most people expected. Remember, the past 18 months, all we heard about was here comes a recession. What recession? You have the lowest unemployment in half a century. Consumer spending is still robust. People still have money in their pockets. There are a couple of little early warning signs. Credit card delinquencies are ticking up, and so there's some forms of spending that seem to have topped and are slowing. But a lot of this is people forget it was a once in a lifetime pandemic, once in a century anyway, where the entire global economy shut down for almost 2 years, and then people bored out of their mind with lots of stimulus in their pocket went crazy, appropriately so, or not unexpectedly, when we reopened. And, I hate the phrase revenge travel or revenge spending. No, people were stuck in their house and tired of it. And so when there was an opportunity to go out, when things finally reopened, when things normalized, people spent a lot of money. But by the way, the certain things, the costs have come back down on when we talk about inflation. And we've talked about this now for a year. I think inflation peaked a year ago in June. And when we look at things like lumber and shipping containers and gas and oil and pretty much all of the goods side, including food, things have stopped going up and in many cases have come back down.
Right.
Oil at $67 a barrel is about where it was in 2006. So when people talk about inflation, there's a difference between things that go up in price and stay up in price and these temporary surges that then come back down. Lumber is back down to pre-pandemic levels.
I remember how many times we talked about that, building supplies, lumber in particular. Yeah. Wow.
Especially if you're like building an outdoor shed or an outdoor shower, that stuff is pricey. Of
course, and you should.
What has the 3 things that really haven't come down in price are not being driven by the usual factors. They're being driven by shortages. So housing, we following the financial crisis, we underbuilt single family homes for practically a decade. So depending on whose bullshit research you want to listen to, either we're 2, 3, 4, 5 million single family homes short. U.S. is 230 something million people. 330 something million people. We were about 300 million 15, 20 years ago. So we added all these people. They need somewhere to live. And that's driving apartment rental inflation higher. The shortage of homes means that people are renting that would otherwise be buying. And that's sending rental prices up, which sends inflation up. So housing shortage is a bad thing. Labor shortage. We want people to get well paid for good jobs, but when there's not enough bodies to do a job, when people can't hire anybody, you are going to make things very expensive. And so you've seen an increase in fast food. You've seen an increase in low end retail because no one wants those jobs because A, they haven't paid a lot, and B, it's a crappy job. No one really wants it. It's certainly not a career. And so in order to attract people, they're paying $14, $16, $18 an hour. It shouldn't be the minimum wage, but somewhere between 11 and 15 is probably a rational number there. And that's just made up number off the top of my head. But so you have a shortage of people. You have lots of people who aren't coming into the country as legal immigrants. It's starting to tick up, but it's far below what it should have been over the past 20 years. Bunch of people retired. Bunch of people are on disability. What are we up to? Almost 1.5 million COVID deaths in the United States. A big chunk of those were workers. So there's not enough labor. So labor prices have gone up. The Fed, no matter how much the Fed raises rates, it's not going to bring more bodies into the United States. It's not going to build more houses. And then lastly, due to the semiconductor shortage, we have had a huge shortfall in new cars for the past 2 years, new car production. Not enough new cars. Their prices go up. That's the first whammy. The second whammy is, hey, we underbuilt cars for 2 years. Guess what? Now there's a shortage of used cars. There aren't enough 2020s and 21s and 22s. So this is going to be a problem that's going to persist for a while. It doesn't matter how much the Fed raises rates. They're not going to magically create 2 million more cars in the United States. So I think the Fed is done, should be done. They should declare victory and go home. I said the same thing 3 months ago. I don't know if they're listening, but at least they finally stopped raising rates. The risk is they could tighten us right into a recession. That's the fear. And a year ago, that fear was exaggerated. But 10 fast rate hikes, over 500 basis points of increases, fastest hiking cycle in history. Hey, the Fed broke stuff.
Are you saying that
was the problem?
That those 10 hikes could still, it remains to be seen that as a result of that, we could get into a recession? Or
that's a possibility. I don't think that's a strong probability because historically, rates at 5%, we're so spoiled by rates being zero for so long.
Yeah. Rates
at 5% are not historically abnormal. In fact, I'll send you this link to this chart.
Every time I hear zero rates, I don't think about like that I bought a car with zero.
Right.
I think about that Obama was
your
president.
Mortgage, your credit card.
I think about that President Obama was the president, and he was making the argument for infrastructure investment at zero rates. If we borrow to rebuild America at 0% interest, and Republicans said no.
I said we should have refinanced our entire debt with 50 or 100-year bonds at 2%. Keep in mind, there's a lot of politics involved this, and unfortunately, there are people who are much, much more concerned with political advantage than with doing what's right for the country. So that link I just sent you shows you rate history going back to 1955. You could see over the past half century plus, past 75 years, we've probably averaged somewhere between 5 and 7%. 0 is unusual, 20 is unusual, between 4 and 10.
I'll include the link in the show notes if anybody wants to see the history of federal funds effective rate starting in 1954. What about, though, the historic investment into America as a result of all of these major pieces of legislation, like it was called the Infrastructure Reduction Act, but it invested in billions and billions in things like renewable energy, battery plants, and so on. Like, how much?
You mean the Inflation Reduction Act? The Infrastructure Act was a
separate. What I meant. Forgive me. Yes, the Inflation Reduction Act. How much of that have we seen be spent and have an effect on the economy? How big of a?
Just the tip of the iceberg. There's been a couple $100 billion in green investments. The subsidies for U.S. built EVs. You're going to see a rapid. There's something really funny. I was just lying awake thinking about this last night. So about 2 years ago, I did, what was that, 2020 or 21? I did the piece for Business Week, Go Big. It was, a year into the pandemic. And it's like, don't just dick around the edges, really bang out a whole bunch of stuff. Do infrastructure, go green, and stop. Let's do a whole nother New Deal. And as I was thinking about this last night, to some degree, they really did a lot of that.
Yeah.
The NASA moonshot is a big deal. The Inflation Reduction Act is a huge deal. We've heard a ton about infrastructure from Trump. In the first 2 years of his presidency, he could have gotten it done. He didn't. Obama had a chance to get it done. He didn't. Give credit to Joe Biden for fixing the rails, the roads, the adding money to mass transit, adding money to bridges and tunnels, and adding money to an EV charger infrastructure, as well as solar, wind, and all sorts of green energy. This is going to have an impact for a generation. To say nothing of the CHIPS Act, which is another massive decade-long spending bill. I suspect that we're going to look back at the Biden presidency 10, 20 years from now, and whether you like what he did or don't like what he did, you will have to admit that he was a very consequential president, and we're only in his third year of his first term. But it's a little early to compare him to FDR, but at this pace, there are some substantial changes that are going to have a long-term economic consequence, I think, for the better for a decade or two to come.
FDR and Biden born the same year, matter of fact. I think people don't realize that.
I'm not sure. I'm not sure if that's exactly correct, but we'll get one of the fact checkers to look into that.
So, what? So
I was wholly not expecting that bit of wit from you.
Is my delivery. I'm seeing headlines on 401ks. One was at your blog, The Big Picture, but I think that was different than this one, which is at CNN today. New report flashes a warning light over 401k account balances. Do you know anything about that?
No. Send me the link.
Latest report, how America saves.
I put up today was Vanguard does a deep dive every year, the annual.
This is from that. This is from that report. Same thing. How America saves from investment firm Vanguard.
Right. It was all positive to me. I don't know what CNN is talking about. Let's flip over to CNN and Vanguard and see how they misinterpreted this. New report flashes a warning light. I'm going to say no. Updated 2:00. The average balance in employer-sponsored savings plan last year was $112.5, well below the $141.5 recorded in 2021. Well, Jesus Christ, the market fell 19% in 2022. Duh. That's just talk about picking up the wrong message. I sometimes whine about financial media, mostly because they suck. There's a lot of it that's great, but some of it is shit. This is right in the shit pile. So what watching you
glitch out over this different interpretation than yours is amazing.
It's not a different interpretation. The 401ks are down because for the first time in 40 years, stocks and bonds were both off double digits, which, by the way, if you only have that sort of snafu once every 4 decades, that's a pretty good thing. So here's what I picked up out of the Vanguard report. Record high plan participation. 83% of people at firms with plans participated, mostly due to a Richard Thaler innovation, a Dick Thaler innovation, automatic enrollment. You don't have to fill out paperwork. You get a job, you're automatically enrolled in your company's 401k. Right. By the way, from 2006 to 2022, automatic enrollment has tripled. It's now really a very, very huge part of the 401k world. 41% of plans offered free advice. 76% of plans with at least 1,000 participants have adopted either an automatic enrollment or an automatic increase as your salary goes up. 98% of participants have an employer contribution. The average employer contribution was over 11%, and 20% of participants just have to boost their savings 1 to 3%, which is not a big number, to hit their retirement savings goals. This is like all positive. Oh, and last year the stocks and bonds were down, but that's what happens. Markets go up and down. If that's your takeaway, you don't know what you're talking about, and you should cover pickleball, not finance. That's just. I'm going to add this to my post saying this is exactly how not to cover it. It's just really fucking stupid.
Well, I am happy to get that scoop. I'm going.
By the way, the rest of it is looks pretty okay, but if it bleeds, it leads sort of shit. Yeah, we know the markets were down 19% last year. Bond markets were down 14%. Of course you went from 140 to 112. Duh. Like, now tell me something that is relevant to 401ks.
This is so great. So great watching it in real time. I wish you would always call me and record when you're noticing somebody's reporting that you find so deeply.
So I've had this conversation with you before. Someone once asked me, what's the secret to your success? And my answer was infantilism. Everything I've done is because I'm enraged that people aren't doing it the way I want it to do.
Right.
From the blog, from a blog kind of came out from an argument with the Wall Street Journal. No, that's not how you seasonally adjust numbers. It's, of course, the sales of houses are better in May than in February. It's that way every year. This isn't saying anything about the housing market. This is seasonality. Like, you don't put out a big press release in January. Oh my God, retail sales in January dropped 60%. No, it was Christmas spending, and that's why we seasonally adjust. It's hot in the summer, cold in the winter. You figure this shit out.
Right.
And, the podcast was a pushback to how furious I was about watching, interviews on TV. It used to make me nuts. This is absolutely true. I'm flying back from Vancouver, and I stuck in I was either Montreal, Chicago, where I had to change planes, and I had an hour to kill, and I'm waiting in the lounge. And I don't remember exactly which press-shy hedge fund manager. It might have been Bill Ackman, but it could have been David Einhorn. Those two guys kind of get mixed up in my head. And the interview on CNBC was just so fucking awful. This is like a decade ago. And, if you ask people questions that are stale by the time they walk out of the studio, you have not done your job. So what's your favorite stock today? Where do you think the market's going to be in a year? When's the Fed going to cut rates? Who fucking cares about that shit? So I get on a plane and finally to go back to New York, and I bump into someone, and he's like, what's the matter? You look like you're all in knots. He saw what you saw about me, and I tell the story, and he literally said, what questions would you ask? And off the top of my head, I just reeled off a dozen questions, which, by the way, I ask on my podcast every week. What books are you reading? Who are your mentors? What advice would you give to a college grad who wants to go into your field? What do you know today after doing your gig for 40 years would have been helpful to know, when you're first getting started? Like, those questions are not rocket science genius questions. It was just, tell me something that is going to last more than 30 seconds that's useful. So anyway, infantilism. Infantilism.
Do you read or follow economist Dean Baker's Beat the Press?
I follow a lot of stuff like that. One of the things I read that I thought was really interesting in this space is actually a CNN publication, and Reliable Sources, which very much looks at the political media press.
But like Dean Baker's whole thing is being a great economist and being right most of the time, thus giving him credibility, and looking at economic reporting from Washington Post, New York Times, CNN, NPR, etc., and shitting all over it. It's amazing. I love that. Yeah. It's such a valuable, because I couldn't understand. How could I question any of that? That's why it's great to have an economist. He just wrote a thing.
He works for a CEPR, which is a very credible
he started
economic shop.
He started it.
I didn't know that.
He was on the show yesterday talking about inflation and the Fed and the future of the economy in terms of AI and what the implications are for jobs, which I think is always a pertinent.
What was his take?
He's old school.
Yeah.
He says
he thinks it's going to take jobs away.
No, he thinks it's going to be disruptive, obviously, and he thinks it will take jobs away, obviously, but he doesn't think it's going to replace everybody's jobs. He doesn't think it's going to be as dramatic, I think, as many people are predicting. And he makes the classic argument that a lot of economists make about the horse and the car and all of that. So
what did he think of the metaverse 2 years ago or 3 years ago?
I don't know. That's a good question. I didn't ask him.
Because that was the next thing. Oh, we're all going virtual. I don't want to go fucking virtual. Well, the nicest thing about vacation is the deal I make with my wife, which is no email, no text, just unplug. And can I tell you, it's just fascinating to come back.
Well, let me ask you about the other thing that you had written about in your blog is that the quits have come to a stop. And I also wanted to ask you about the work from home controversy and how you see that changing in different firms and industries. But, people have basically stopped quitting their jobs. Is that the deal?
It stopped. It slowed down dramatically about 6 months ago, or there were signs it was slowing down. Look, every month a bunch of people quit their job, and every month a bunch of people start a new job. What we've seen has been a reset, has been a generational reset, especially from the lower end of the economic scale. So, I wrote a post in the middle of the pandemic called "Elvis has left the building," and remember, we used to think of the lower classes. At least some of the political ads used to paint the lower classes as good for nothing, lazy, shiftless, on the public dole. But when you look at what took place during the pandemic, people are stuck at home. They have pandemic stimulus money. We had like $1.7 trillion in unemployment paid out as part of the first two CARES Act, both under President Trump. People took advantage of the time at home. They upskilled. They got themselves credentials. We had record new business creation in 21 and 22. Record numbers. Not just a normal, hey, things are going up, but like a spike of new business creation. And my theory has been lots of people who were in crappy, low-paying, dead-end jobs, whether it was fast food or retail or just the bottom, quarter of the U.S. workforce, went out and said, I could do better. And some of them created apps. Some of them started their own businesses. Some of them just got credentialed for certain types of technology jobs that you need to, whether it's a database manager or a security, a digital security specialist or a design or whatever. And so I think the year off was like a fifth year of college for a lot of people, or a fifth year of high school vocational training for a lot of people who really took advantage. And suddenly, when the economy reopened, you couldn't find people to work in warehouses or in retail or in fast food or in hospitality, just the crappy jobs that no one wants if they have other options. So that's the first part of this. The second part of this, to answer the return to office, work from home thing. So the U.S. is averaging, I've done a few posts on this. I find the subject fascinating.
Yeah, me too.
The U.S. averages about 60% return to office. In Europe, it's almost 95%. Why is that? Well, first, the mass transit is much better in Europe. And my pet theory is schlepping into the city and or to wherever your job is and sitting in traffic for an hour is a fucking misery.
Yeah.
And if people have the choice, they'd rather not do it. If you get to sit on a clean, electric, smooth, reliable bus or subway or train in Europe, you're at work in 30 minutes. So mass transit is one thing. The second thing is the houses are much more expensive in the U.S. than Europe. So a lot of people have to live further away from the metro employment center, which makes their commute worse and more unpleasant, because 20, 30 minutes away is really expensive housing, and an hour and a half away is much cheaper housing. And then lastly, the average European house is half the size of the U.S. apartment house. So I'm sitting in a fourth bedroom that I have plenty of room to turn into a home office. That's not a lot of choice at a lot of the apartments and houses that people live in Europe. And so they want to get the hell out of the house. There's no room. You're either on a dining room table or it's not like they have room for a shed in the backyard where they can broadcast from.
Sure.
So if we want to see a stronger return to office, you need to fundamentally fix just two little things in the United States society: housing and transit. Once you fix those, the return to office will go right back to the high 90s.
That was a great point.
Shouldn't really be that difficult. How hard is it?
Great points.
Hey.
So anyway, that's you wound me up today.
I love
pretty
it.
Good.
Well, one more thing I want to ask you is last time I think we talked to was right before there was a final resolution on the debt ceiling, and you weren't too panicked, and certainly you weren't telling your clients to be.
How'd that work out?
Basically how you said, I think. I mean, certainly, obviously, for the economy, pretty much fine. I mean, the idea was global disruption or nothing, really. Obviously, a lot of people are going to be suffering as a result of losing Medicaid, and there's a lot of different things. But in terms of the economy, in terms of markets, it didn't destroy the world as it could have. And what do you think about the resolution and the outcome?
It's not ideal, but it's better than I think a lot of people expected. I don't know what to call the extremist group, the MAGA group in Congress that kind of forced, what's his name, McCarthy's hand to push the debt ceiling.
Well, but it reminds me mostly fit in the insurrectionist category for most of them,
right?
But, yeah.
But it reminded me of the scene with Cleavon Little in Blazing Saddles, where he holds the gun to his head. Help me! Won't someone help that poor man? Where you remember that scene?
I don't.
Oh my God, it's hilarious. But it's when he first shows up at town and meets the hostile townspeople, and he pulls a gun on himself and throws his voice and said, "Anybody moves, and this guy gets it," using much worse language, and kind of walks himself off the stage. That's what this was. It was like they pointed a gun at themselves and said, "Hey, if you don't crash the U.S. economy, we'll shoot ourselves in the head." And eventually, okay, go ahead. Eventually, at a certain point, the adults prevailed, and you would expect that to happen. I can imagine that Speaker McCarthy got a phone call from a couple of donors who said, "If you fuck this up, we will make sure you never have another job in politics. Nobody in your family, nobody ever. You will be forgotten by history as just." So don't mess this up. And if you think I'm messing with you, here's a check to $1 million to your opponent. I'm ready to write it. You will be my new hobby. I got to think a handful of key peoples got phone calls that said, listen, all this MAGA stuff is a lot of fun, and trolling the libs and owning the libs is really, this is a lot of funny. But we're wealthy, and if you fuck up our money, we will fucking kill you. I swear I think that was a phone call he got. Like, hey, now you're messing with us, and you're messing with the wrong people.
But you don't have any accurate reporting on those calls, though, do you?
I wish I did.
Probably some of your friends.
It doesn't even have to be that overt.
Yeah.
Hey, Kevin, I've always been there for you. I've always taken care of you. Now you're messing with my family. You mess with my family, bad things happen. So make sure this works out. It was a very, Sopranos sort of.
Yeah.
Like, why on earth did he suddenly start negotiating like an adult? Like, whenever I see a behavior or a decision I can't explain, I always try and work my way backwards. What motivated this guy, who clearly is just a sycophant, suck up, D-bag loser, only behave like an adult? Right? I don't know. But I can imagine that someone said, hey, if you mess this up, it'll be the last thing you do in politics in D.C.
I love all of that. Thank you very much for talking to me today. Anything else?
Hey, man, my pleasure.
You're dismissed, Barry Ritholtz.
I'll find that Cleavon Little clip. It's just, it's foul and hilarious.
All right, there he goes. I cut him off. Still haven't seen Blazing Saddles. Thank you, Barry Ritholtz, for joining me. Always great to have Barry. Please let him know that you heard him here on the show. Go check out his podcast, Masters in Business, if you want even more Ritholtz. And I don't plan to post anything because it's Sunday. It's the Lord's Day, everybody. I hope that you're having a relaxing weekend. And I do plan some great shows next week. Going to be a big week here on Stand Up. Very ambitious, very inspired, and feeling very supported by so many of you. But we always need more subscribers, or else we are dead. We cannot continue here in the shed. So sign up now at patreon.com/PeteDominic, or you can always edit your pledge up, which is amazing. Send a couple more bucks the way of the shed this month if you want. You can do that at patreon.com/PeteDominic. That's it. That's all. See you on the Discord platform anytime. You're never alone if you're a member of the stand-up community. And now let's all listen to one of our favorite members, Jon Carroll. On tour right now, johncarroll.org. Take it away, John.
You got to open up the window to let in some light. You got to stand up. That's right. You got to rise up. You got to stand up. You got to stare the devil straight in the eye. We got to let him know it's his turn to go. See it clear when all you hear is a lie. So get up off of your butt, get down off of your fence. And even if it ain't a very friendly audience, well, they'll begin to listen when you start making sense. And you stand up, stand up. No need to point your rifle to defend your town. Just stand up, stand up. You know they can't deny you what you're laying down. Boy, you better stand up, stand up. Show your face of every color, yellow, black, red, and brown. She's the place where every lost child will finally be found. There's only one thing to do before we stand our ground, and that's stand up, stand up. Well, the founding fathers saw a land for all. They had to stand up, they had to stand up. They had a keen imagination for a crystal ball, drawing all the plans of stand up. But all they had to go on was the time they were in, with other causes for laws, and since they weren't even sin, they knew that change was gonna come before the change could begin. They had to stand up. All right, they had to stand up. We got to stand up. We got to look the devil square in the eye. We gotta let him know it's his time to go, and make it clear when all we hear is a lie. Why you lying awake wondering where the money all went? It'll be the cost of freedom that'll go unspent. You can see him flee the scene of that experiment if you stand up. All right, we got to speak up, we got to reach up and raise your voice in every way you know how. Don't be toes up, you got to show up. Ain't no better time to do it but now. No need to pledge allegiance to no wanton tribe. Rise up, show obedience to the voice inside, and listen well and it'll tell you not to run and hide. It says stand up.